Today, there is not a single country without debt. The United States is currently dealing with a debt exceeding $38 trillion. The European Union follows the United States with $14 trillion. Japan stands at nearly $9 trillion. Oil-rich Saudi Arabia and export icons like Germany and China are in almost the same situation. The paradox is actually here. If everyone is a creditor, who is the debtor? This is the stage of the financial historian, the place where money, power, and history sink their teeth into one another. And what is happening is not as simple as it appears. Debt is not an ordinary hardship. It is an indispensable element of our era. Every war, every crisis, every rise and fall has been built upon an overlooked IOU, debt note, board. If you follow the chain of debtors long enough, you may see a disturbing truth. The world is not indebted to any particular person. It is indebted to itself. That does not mean everyone profits from this situation. To understand how we reached a spiral of over $315 trillion in debt, nearly 3 times the size of the global economy, we must look back to the beginning. Centuries before the first credit card, the idea of national debt emerged not on Wall Street but on battlefields. In 1694, England was at war with France and its gold reserves were shrinking. The king sought support from merchants. In exchange for permanent interest payments secured by future taxes, they financed the crown. To keep this arrangement under control, the Bank of England was established. What happened was truly revolutionary. The state could now use money it did not yet possess. The lenders gained something even more valuable, a guarantee from the government, one that could be bought, sold, and transferred. That moment marked the birth of the government bond, the first step of the new financial system. France adopted the same method. The Netherlands advanced it further. The newly independent United States embraced it to finance its revolution and later its westward expansion. National debt was no longer seen purely as a weakness, but as a measure of credibility. The ability to borrow was the ability to govern. Empires once conquered lands in the hope of finding gold. Now they issued bonds to earn interest. Wars had evolved into revenue. Let us move forward a few centuries. Debt has now become the world's most dominant export product. America owes $38 trillion. Japan owes more than $9 trillion. Global borrowing increases by approximately $1 trillion every 3 months. All countries are in debt. Every bank provides credit. Citizens, through taxes, savings, and pension funds, are now both debtors and creditors. So who exactly holds the other end of the rope? Let us begin with the United States. Because its debt is not merely national, it is global. Half of the $38 trillion debt is publicly held, meaning it is owed to investors. Nearly 2/3 of those investors are American banks, pension funds, mutual funds, insurance companies, and the Federal Reserve itself. The remaining 1/3, approximately $9 trillion, belongs to foreign holders. The largest foreign creditor is Japan with $1 trillion, followed by China with around $800 billion. Then come the United Kingdom, Luxembourg, and Belgium. So when it is said that the U.S. is indebted to China, that is true, but only about 2% of the total. The majority of America's debt is owed to America. The Treasury issues bonds. Banks and funds buy them. The Federal Reserve often repurchases those bonds, creating new dollars in the process. Americans pay taxes. Those taxes fund interest payments on the bonds, and that interest flows into American retirement accounts. It is like a holographic mirror. The debt is visible, but the creditor is often a reflection of the same system. And this situation does not belong only to America, it is global. The U.S. borrows from Japan through bonds. The U.S. provides credit to Europe via the IMF. Europe lends to developing nations through the World Bank. Developing countries in turn direct their foreign exchange reserves into Western bonds, effectively lending back to advanced economies. Every country holds another country's IOU. Every promise is secured by another promise. Yet there is another layer, the markets themselves. Behind every government bond stands a network of institutions, hedge funds, pension funds, sovereign wealth funds, and central banks managing trillions of dollars. They are the true managers of credit. They determine which country borrows cheaply and which must pay a premium to survive. When they lose confidence, currencies collapse, governments fall, and economies can be reshaped in a single day. Democracy decides who governs, markets decide who survives, and the supreme market maker, the Shah of this system, is the central bank. Central banks do not merely manage debt, they produce it. When the Federal Reserve or the European Central Bank purchases government bonds, they create new money in response. The liability of one balance sheet becomes the asset of another. Every dollar in circulation represents a unit of debt somewhere. There is no debt-free money. Every coin, every banknote, every dollar carries an invisible IOU. For many years, this cycle survived on trust. As long as investors believed governments would at least pay interest, even if not the principal, the mechanism remains sustainable. But what happens when trust falters? We have seen it. In 2010, Greece reached a point where it could no longer service its debt. Bondholders were uncertain and panicked. Interest rates soared abnormally. The European Central Bank and the IMF stepped in. The only solution came with austerity conditions, tax increases, spending cuts, mass unemployment. For the public, bailout became synonymous with sacrifice. In Argentina, repeated defaults turned debt into a national nightmare. In Sri Lanka, when the government ran out of foreign currency to service its loans, fuel shortages and political collapse followed. When the system is damaged, creditors become visible. The IMF, rating agencies, anonymous bondholders. Even in collapse, the system continues in the same way. New loans replace old ones. Restructurings occur. The mechanism resets under a new name on the same balance sheet. Because in this century, debt is not designed to be repaid but to keep the wheel turning. Governments do not aim to eliminate their debt entirely, not now, not ever. It is policy. When we take a loan, we are expected to repay the principal. But states do not function that way. They treat debt like a subscription. They issue new bonds to close old ones. In economics, this is called refinancing. Interest is the essential product. It is the rent of stability. The global economy is now dependent on that rent. Today's global financial system is based not on repayment, but on confidence. The United States will never fully eliminate its $38 trillion debt. It will continually refinance it. Japan, for example, has been rolling over its debt for years. It now exceeds 250% of its GDP. Yet its bond yields remain close to zero. Investors are not waiting for repayment. They anticipate renewal of the agreement. Why? Because for them, government debt is the safest form of collateral. A U.S. Treasury bond is not a burden. It is an asset, the foundation of global markets. Pension funds hold it. Banks use it as collateral. Central banks treat it as money. The system depends on governments never fully paying off their debts. If they did, the world would lose its most trusted financial instrument. What would happen if Washington decided to pay off all its debt? Banks and funds would lose their most stable asset. The dollar supply would tighten dramatically, triggering deflation and collapse. Paying off the debt would dismantle the mechanism that sustains the economy. Therefore, governments do the opposite. They continue issuing more, not recklessly, but rhythmically. Debt becomes the main artery of capitalism, flowing through every pension account, every mortgage, every market. When politicians speak of balancing the budget or eliminating national debt, they are selling an assumption. The goal is not to erase debt. The goal is to keep it sustainable, serviceable, and desirable, to preserve the system's goodwill. Because once belief fades, numbers lose meaning, confidence collapses, interest rates spike, and an economy sustained entirely by rolling promises comes to a halt. This is the ultimate secret of sovereign debt. The plan was never to repay it. The plan was to maintain belief that it could be repaid. It is a closed loop of trust. As long as trust persists, the numbers can continue indefinitely. However, trust is not distributed equally. When we say we owe it to ourselves, that is only partly true. Interest payments do not spread evenly across society. They flow from taxpayers and workers toward institutions and financial holders of debt. Debt is not merely a transfer between countries. It is an exchange between classes. That is why global inequality and global indebtedness rise together. The system consistently rewards those who hold debt. It penalizes those who merely pay it. If this sounds familiar, it is because it is the same story expanded, from households to nations, from nations to the entire world. Creditors are not villains. Debtors are not victims. Everyone is a structural component of the system. When new borrowing can no longer sustain old promises, that is when the question, who is the creditor, stops being abstract and becomes personal. Because there is no single structure or individual to declare responsible. Not China, not Wall Street, not the IMF. All of humanity. The modern financial system has transformed debt into money. Governments issue it, banks expand it, investors trade it, citizens become dependent on it. The line between debtor and creditor has disappeared. Debt once meant bondage. Today it means balance. But if that balance is ever broken, if trust shatters, if belief diminishes, the illusion will end, and we will remember what debt truly is, a promise that cannot be kept forever. If this gave you a new perspective, subscribe. History repeats itself. I will show you in all its naked reality where to look to see the true nature of money. It is time to wake up.